There are 3 stocks that you need to be looking at to play this huge trend that's going to play out over the next 10 years. And like I said, this is a big trend, so you don't want to be missing out on it. We're going to go over those 3 stocks in this video. But before we do, I just got to tell you, stock picks are only 10% of successful investing, which is surprising, I know, because there are so many YouTube videos talking about stock picks constantly, myself included in this video. So you would think it's the most important thing to find the best stock, but it's not. It's only the very first tiny step of successful investing. Like I said, 10%. The other 90% is everything you do to actually manage that investment. So it's really important to know when you're buying, when you're selling, how much you're supposed to invest. Right now, the market has been going down for a bunch of days in a row. Should you buy during a dip like this? Or is this the start of a bigger crash? I mean, how do you know? How do you know when you're gonna buy? No one wants to think about that though, because everyone's focused on stock picks. So that's my disclaimer. It's key to remember that the full strategy is the most important part about investing. And if you want to see our full strategy and how we do it in the Fallible community, myself and all our Fallible members, check out this free training. There's a link in this video and down below in the description and comments. We go over all those things we were talking about just now. Not just how to pick the stock, which is important, but again, only the small first step, but also how to manage, when to buy, when to sell, what to do when the market is falling. Those things are really important. So definitely check out this training if you want to learn more. Okay, so the big trend that I'm talking about in this video is AI, artificial intelligence. And I know we talked about this in a previous video, but now we're going to get into some more details like I said we would. This is coming from Macro Ops Research, my research firm. So let's start out a quote from Satya Nadella, the Microsoft CEO. Actually, a weird trend in tech, it's actually an awesome trend, is so many Indian CEOs. And a lot of them are my type of Indian, like Satya right here. They all grew up in the same area when my parents did in India. It's fun to see them at the top of these companies like Microsoft, I think Adobe is another one, and Google too. But anyway, he was saying digital technology pervasively is getting embedded in every place. Everything, every person, every walk of life is being fundamentally shaped by digital technology. It's happening in our homes, our work, our places of entertainment. It's amazing to think of the world as a computer. I think that's the right metaphor for us as we go forward. So you've probably seen this concept before, right? Everything is getting a computer in it, from your fridge to your toilet. Is it necessary? I don't know, but it's happening. And if the world is a computer, then storage and memory are super important, because computers without memory are just empty screens. And you need that memory to develop AI and deep learning. In 2019, 48 million smart home devices entered new homes. It's a $27 billion market right now, which goes to show that everything really is becoming computer. And it's supposed to grow at a rate of 21% per year over the next 3 to 5 years. And as AI technology keeps improving, so does its number of potential applications. So here's just a few: automotive, consumer electronics, IT and telecommunication, medical. A big one that's also happening that I personally keep track of is media. Everything is going the way of AI and the algorithm, which is kind of scary because I'm on one side as a creator fighting with the algorithm. I don't like it. And then on the other side, the people consuming the content are getting really molded by a machine. Because I'm a consumer too, and this ends up happening to me, but you start clicking whatever the algorithm feeds you, and then it's like a reoccurring loop. And a lot of times my content gets trashier and trashier. And maybe that just means I'm a trashy person, I don't know. But I really don't like these algos making all these decisions. Even algos are greenlighting movies and TV shows now. And I don't know, maybe I just like a human touch more in my content. But it's also scary because I just saw the latest Terminator that came out on Amazon Prime. You know, the flop, just like every Terminator movie that's been a flop since Terminator 2, which was incredible. But that whole Skynet idea always comes back like, oh man. Really hope that doesn't happen, but with the way that AI is going, I don't know. Even Elon gave up on trying to ring the alarm about it. So we'll see. But anyway, AI won't experience innovation without proper storage and memory technologies. And as you can see, we're going to talk about companies that operate in this space because they are the ones that are going to benefit a lot from this AI huge trend. Enter semiconductors. So AI is turning semiconductors into a secular growth powerhouse because of this huge trend. And the big reason why is because AI has an insatiable need for more data. Check this out from McKinsey. AI applications generate vast volumes of data, about 80 exabytes per year, which is expected to increase to 845 exabytes by 2025. And an exabyte is 1,000,000 terabytes. So last time I checked in this computer I just got, I'm getting hard drives of 1 terabyte or 2 terabytes. But this is talking about exabytes, which is a million of them. So the data capacity storage requirement is just so big. You can't even really imagine it, at least as a normal person. Maybe the scientists can. Of course they can. But anyway, the public companies that are producing this memory and storage capability, well, they're going to turn in record profits and margins over the next 10 years. Now, one of the things that's important to understand in this industry is the difference between memory and storage types. So one type is called DRAM storage. And this type of memory is used to store code for algorithms, processes, and things like that. And then you have NAND storage, which is the memory used to store data for pictures, music, all that type of stuff. So DRAM stands for dynamic random access memory. It's considered volatile memory, meaning that it stores memory only when a device is on, but when you turn the device off, the memory goes away. So this is used for your main computer processor and graphics cards. This is the same memory also used in portable gaming devices and video game consoles. So there's a few advantages of DRAM memory. First, it can be deleted and refreshed while running the program. It also has smaller size and higher storage capacity. And it's 100 times faster than NAND memory, the other type. But there are some drawbacks too, like the data requires constant refreshing, there's a complex manufacturing process, and the memory is volatile. So it does go away when you turn things off. But DRAM demand is here to stay thanks to autonomous driving, video game consoles, and of course AI, which is what we're talking about. The CEO of Micron, oh look, another Indian guy. That's my cousin's name. But he said AI servers require 6 times the amount of DRAM and twice the amount of SSDs compared with standard servers. This is from another article. As AI workloads continue to grow, hyperscale data centers require more and more memory. In the first quarter of the year, DRAM supply remained tight, mainly due to the massive construction projects of data centers, some of which are bigger than football fields. I don't know if you guys have seen videos of these, but they're just enormous, huge data centers. And some of them are underwater. And these are the places we'll probably have to bomb when the robots take over to try and take out the robots. Oh, I am not looking forward to that Terminator future. I am not cut out for it. So companies that are going to use AI, they're going to shift their storage centers to the cloud. And this will lead to increased DRAM demand and a sustained DRAM upcycle. And maybe I'm pronouncing this wrong. I don't know. I don't really care. I'm just going to call it DRAM. But moving on, let's go to NAND. And this storage is our long-term memory. So this allows computers and applications to store large data sets. That way they can retrieve the information when needed. So there's a few differences between the two. NAND doesn't need power to keep data. So you could turn off your computer and the data will still be there tomorrow. It's ideal for portable devices and it's cost effective per byte with higher storage capacity. It's also easily replaceable. NAND is once again very important for AI-based technology. Research says that the NAND market is expected to grow at 20.6% each year for the next 6 years. And the reason why is because of AI. AI optimized processors for the type of computing that NAND does, they're going to grow at an annual rate of 65% in the years to 2023. Toshiba is estimating that by 2025, NAND memory will account for 40% of global chip storage. So it's huge. Now the NAND market is actually an oligopoly between 5 companies. So you got Samsung that owns the highest portion of the market, 35%. Then you got Micron, Western Digital, SK Hynix, and Intel. Now when you have an oligopoly in a market like this, and it's a commoditized market because they're all producing the same thing for the most part, the lowest cost competitor wins. So in semiconductors, which is the storage that we're talking about, that means more storage space on less surface area. So that race that's been happening towards smaller chips and lower prices resulted in a 46% price collapse in the NAND market in 2019, which is the opposite of what we want, right? They call that type of market a bloody red ocean, or maybe it's just a red ocean, but the red is from the blood, because with companies like this, it's just a race to the bottom, who can charge the least. And what happens is that your margins get screwed, so you become less and less profitable, and it's like a war of attrition. So you're hoping to capture the most market share. It's like Uber versus Lyft. I used to get these offers to me like every day on both apps saying, hey, use our service and we'll give you $15 off. So they're basically paying me to take their car. So when you get into that type of competition between two businesses, that is not a good place for investors to be, because the profits aren't going to be there, and they might not be there for a long time. But this is turning around in the semiconductor space because of this huge AI demand driver. And now all these companies' charts are setting up for very bullish moves. So let's look at the top 3 ideas finally, 3 stocks. First one is Micron, our favorite all-around memory play. So Micron is one of the cheapest NAND companies in public markets. It's trading at 2.3 enterprise value over sales and 5 times EV over EBITDA. And NAND memory accounts for 25 to 30% of their total revenue, which is good when, demand for that goes up. They're also the 3rd largest DRAM manufacturer in the world, and they've had a 10+% return on capital over the last 30 years. The CEO is an industry leader in NAND, and another benefit is given the chip price collapse that we just talked about, the red ocean, there's a lot fewer suppliers catering to more customers. So there's a demand and supply imbalance, because this is what happens when prices are going to zero. A bunch of companies can't afford it, they go out of business. So that's why we called it an oligopoly between 5 main companies now, because prices collapse so much. And the ones that survive, if the demand changes, like what's about to happen with this AI trend, well, then they're going to benefit the most. So this new rise in demand should offset the natural decline that will keep happening in the average sales prices of these NAND chips. So fewer players, because so many went out of business, will result in a focus on profit stabilization, not cost cutting and margin compression, which is what happens when you're in that race to the bottom. Now, if we look at the technicals, we could see that Micron is actually breaking out. So you could draw this line sloping down and you see it broke out. What was this, October 13th? And here's an interesting thing about breakouts. What happens often is that a stock will break out, pop way above, and then come back and actually test the resistance line, which is now a support. And this second test is where a lot of traders decide to get in instead of on that first breakout. And the breakout was right here, right on the 13th, or what is this? 13th, yeah. So on the 15th, this was just an intraday test. So price started down here, testing that line, and then shot higher, which is a very bullish signal. A lot of people jumped in that. And then you see the breakout continued. So you really have a choice there when you're dealing with stocks. Do you want to buy on the breakout or buy on the retrace? And the strongest breakouts, they don't retrace. So, you miss out on some chances like that. But a lot of breakouts also fail. So what could have happened is that this retraces back and then breaks through. And if you bought on the breakout, if you're using proper risk control, you would have lost, because you would have to sell. But if you were buying on the touchback, then that would have avoided you the pain and the loss. So, it's different ways to kind of play the same breakout. And now if you scroll out to the monthly time frame, you could see a much bigger pattern is playing out here. So there is compression happening on the longer term time frame. And we know that compression leads to expansion. That's how markets work. So if they start coiling up like this, they're going to break out one way or the other. And how do you know which way they'll break out? Well, you don't, but you can take a bet, right? And in this case, we think the fundamental thesis is shaping up for things to break higher, but you never really know. So this is another choice that you can make as a trader. Do you get in now before this large breakout, or do you wait for it? And again, if you go to the smaller time frame, the breakout already happened. This line was actually down here, right? So it's really up to you. It depends on what time frame you're playing. And yeah, it does get a little complicated, which is why I stopped trading like this. Like in this strategy that I talk about in this training, we talk about a mechanical quant system, because that's the way I trade now, and it's just so much easier and more effective because you don't have to worry about this. I'll explain a little more about that in a second though. So another option in addition to Micron is Samsung. This is the best international play if you have access to this type of stock. So Samsung is the cheapest memory chip manufacturer in the world. It's trading at 1.23 enterprise value over sales and 4.67 EV over EBITDA. They're investing $115 billion into their semiconductor business over the next decade. So they're ready for this. And they command the top market share in NAND memory chip production. They're one of only 2 companies in the world that can produce these chips at a large scale. So that's a huge advantage. Right now for the company, there are low expectations for their revenue growth. The market has it wrong, so there's real opportunity here. And you can see there's a head and shoulders pattern forming right here. A breakout above this line would give a good entry point. And then finally, we got Western Digital, which is our contrarian turnaround play. And I remember I used to have a Western Digital external hard drive back in the day, full of Lil Wayne mixtapes and anime. Some good stuff on there. But anyway, they are the second largest manufacturer of SSD hard drives behind Samsung, and they have over 1,400 patents around NAND and SSD technologies. You can see this chart right here does not look perfect, but price is sitting at a long-term support level of $38 a share. And this is the monthly chart right here. So if you're a bottom picker, this might be a really good opportunity to get in. You can see this as a strong support because of how many times price has gone and touched it and rebounded. So if you got a contrarian view thinking, hey, the market isn't pricing this AI trend properly, you could get in at a very good price here. And it gives you that support that should hold, hopefully. Again, you don't know, so it's really up to how you want to play it, what your strategy is. And again, decisions like this is why I just like my strategy. Of course, I'm biased, but there's a reason, because it takes out all of this guesswork. We literally just have an algorithm that scans all the stocks and tells us which are the strongest ones based off momentum. Then every month we rotate into the top 5 highest momentum stocks because they have the best chance of continuing to go up. And we're up over 60% this year just doing that. And the best part is I don't have to read charts because, like I said, you can interpret them in so many different ways. I also don't have to do all this research. I mean, this is definitely good research, comes from my own research firm, so of course I think it's good. This is what we send to our clients. But at the end of the day, I'm really a systems guy because all those decisions that I was talking about before, when to buy, when to sell, what to do when you want to get into a stock but the total market is falling, all those decisions that you constantly have to make, they cause so much anxiety anxiety and work and stress. It's already all figured out with the system. That's why I love systems. Makes life so much easier, and more than easier, it's just super profitable, but also much easier because I only spend less than like 20 minutes a week doing this. It's actually less than 20 minutes a month, but people don't believe me when I say that, so I say per week. But anyway, you could learn more about that strategy and how you can do it yourself with the system in this training. So there's a link in this video and down below in the description and comments. Definitely check it out. Make your life so much easier. And if you like this video, make sure you subscribe to this channel so you can see the next one. We do these videos all the time. Do that, and I'll see you next time. Stay fallible out there. Bye.